Welcome to the Capital Spreads Weekly Update. Today is Wednesday, the 27th of October 2010. And the week so far, well, it's been quite a quiet week so far. However, there are a couple of things of note. The first was we had the UK GDP figure come out yesterday at a far better rate than actually anticipated or expected. We had a UK GDP figure of 0.8% and many people were actually expecting just a growth of 0.4%. This led to a strong rally in sterling dollar as a result. The US corporate earnings season also continues to tick over. As on the whole, this week so far has been quite a mixed bag. However, the corporate earnings season so far in the US has been very positive overall, which has actually led to the strong rally we've had in the US indices as well as the European as well as the UK indices. So looking at the situation as it currently stands, the FTSE is trading around 56.70. The FTSE has actually been in an uptrend since back in August 2010. Now, this has initially been fueled by the US corporate earnings season. This was further helped by the austerity measures announced by George Osborne recently, and again the GDP figure that we had announced yesterday also helps continue fuel the FTSE going higher. The near-term target for the FTSE certainly seems to be around 58.38, which was the yearly high for the FTSE. Near-term support, we're looking around 56.35. However, given the strong influence that the US actually has over the UK index and the fact that we've got a number of key figures coming out of the next week or so, this will largely influence where the FTSE will go. However, if you believe in the saying that the trend is your friend, you would certainly want to be bullish in the FTSE rather than bearish right now. Sterling dollar has also been very topical very recently, simply because of the strong GDP figure that we did announce yesterday. It's currently trading around 158.20. Now, the sterling dollar has also been in a strong uptrend since May 2010. Now, I have a chart to show you what I mean regarding this. As can be seen with the sterling dollar, it was trading around 142.40 back in May, rallied all the way back up to 161.00 very recently, and it's now currently trading around 158.20. The near-term trend for sterling certainly seems to be up, and if anything, again, like the FTSE, you'd want to be bullish rather than bearish. Gold is currently trading around 11.33. It hit an all-time high of around 13.86 recently, having fallen $50 off recently. However, despite the $50 fall, we're still in a bullish uptrend in gold at the moment. If gold was to fall down to $1,300, you would still be in an uptrend in gold. Again, I've got another chart to show you what I mean regarding this. As can be seen, gold's gone from 13.86 down to 13.33. Again, we could possibly see another sell-off in gold recently because it's been influenced very strongly by what the US dollar is doing, which was the main reason why gold came off yesterday. We had a strengthening in the US dollar. Again, long-term view on gold certainly seems to be very bullish, and if anything, you'd want to be a buyer rather than seller right now. However, bear in mind that we could certainly expect a strong retracement before it might possibly rally. Oil seems to have found a new trading range between $80 and $85. It's currently trading around $82, smack in the middle of that range. Now, oil is very strongly influenced by the global economic outlook. And again, given the number of key figures that we've got coming out over the next week or so, this will certainly help move oil around. In terms of the week going forward, we've got a number of key figures that will certainly move the markets over the next week or so. We've got the US GDP figure coming out on Friday. We've also got the United States FOMC interest rate decision next Wednesday. We've also got the Bank of England decision next Thursday. The US non-farm payroll, the jobless rate data coming out on Friday. And also we've got the United States midterm election results coming out on Tuesday, which will influence how effective Obama's administration can be with its policies. Now, all those figures and economic and political announcements will definitely move the markets around, because they will actually help shape which way the global, although largely the US economy, but also in part the global economy will go in the next few months or so. In terms of client activity, many of our clients have continued fading many of the market moves we've had recently. So they've been short the indices, the Dow, the S&P, the DAX and the FTSE. In terms of gold, they continue to hold long-term positions in gold that have been bullish, so they continue to hold long positions in gold. Other than that, they're relatively flat in the oil markets, and they've recently acquired a new position of being short sterling yen. In terms of a theme of the week, I would say the theme of the week generally seems to be a sense of wait and see, and this seems to be partly because of largely of the fact that we've got a number of as I mentioned, key economic and political data coming out next week. We've had strong rallies in the markets up to now, and it seems to have plateaued recently until we get this new fresh impetus of data, which will then decide which way the market will continue going. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.